All right. Today's SPY was down 0.1% going into CPI data tomorrow, and I do think tomorrow will be a catalyst to start moving us out of this supply zone. And remember, I'm calling the supply zone on SPY anywhere between 435 up to about 440, and we're now also reaching the downtrending resistance trendline, which is right around 441 with today's price action. Now that is a downtrending slope, so it will decrease each and every day. So we are definitely at very critical resistance, and we've gone there in a straight line with no pullback. And to illustrate that, I can just show the closing prices, and we've only had a 1-day pullback during this whole entire rally higher. Now, 1 day does not count as a pullback in my books. We need at least 2 to 3 days. And after a rally this vertical, I think we're going to see a much deeper pullback than people realize. And another thing I want you to think about is if you just look at your brokerage account and you look at your money market, you're currently getting up to about 5% interest just to sit in cash. So even if inflation is high, and we're saying inflation is anywhere between 3 to 4%, you're still outpacing inflation by simply holding cash, and that is definitely going to be a headwind for equities. When you're getting that much interest just to hold cash, why would you go take on a lot of risk in the stock market? So do not be surprised if when we start to pull back, we just continue to pull back and we get a very nasty sell-off after this very vertical rally. Now, I'm not saying this will definitely happen. We need to follow the price action and look at the price action at these support levels as we start to pull back. But in the event we just start collapsing through support levels, I'm telling you right now, I would not be surprised in the slightest, because that would actually make a lot of sense that people are getting out of equities and just going to sit in safe haven money markets like cash, collecting that 5% interest with no volatility. So we're at a very unique situation in the market where a crash could be likely, especially because we are in a downtrend. And when we're in a downtrend getting a vertical rally straight into resistance, it's very likely that could be our lower high before the next lower low. So do not rule out the bear scenario. If there was ever a time we were likely going to crash, this is actually going to be the time when nobody is expecting it. Everybody is now thinking we're entering into a new bull market, even though a lot of this year while we were in a bull market, a lot of those same people were bearish and calling for crashes. And now that we have the market structure that allows for a crash, these people are now getting a lot more bullish, expecting us to go to all-time highs. No, I do not think that's a coincidence. No, I do not think that is a surprise. I think that actually makes a lot of sense that people would start to get bullish during the time the market actually starts to look bearish, when they were bearish the entire year when the market looked bullish. The market fools the majority, and that's all you need to remember. So if the majority are getting bullish with a chart that is still in a downtrend, that should be a huge red flag for you to get a lot more cautious. Now, it's not all doom and gloom, and I'm not saying there's not a bullish scenario. I've told you many times, if during that pullback we get a higher low into a higher high breakout, then we are likely going to continue towards the previous all-time highs and possibly even break right through them and make brand new all-time highs. So it's not all doom and gloom, but you definitely need to heed cautious and be very careful here at critical resistance, because we are in this downtrending structure. This downtrending structure could easily yield a lower high into a lower low, which could take us all the way down to SPY levels of low 400s into the 390s and possibly even 380s. So take it seriously. Make sure your trade plan is very well prepared for any of the scenarios. And in the short term, even in the bullish scenario, I think we are due for a pullback very soon before we can go any higher. So if we start to break out after CPI, make sure you get confirmation of a valid breakout before you just blindly buy that breakout, because it's likely going to be met with a bull trap into much lower prices. Again, nothing is guaranteed. We follow the price action each and every day, and only by following the price action with a proper risk management plan around knowing both scenarios is really going to yield you profitable trading over long periods of time. So risk management is the foundation of profitable trading. So make sure no matter what you're doing here, you're managing risk, and right now cash is king until we get more clarity. Do not be afraid to hold cash, especially when you're getting paid 5% to hold that cash. If there was ever a time you should be willing to hold cash, now would be a much better time than the last few years. Where holding cash, you were getting damn near nothing on interest because the interest rates were so low. That is not the case now. You get a lot of interest on your cash, which should help you be a lot more patient. So on SPY, watch the critical level at 440, which is the downtrending resistance, and a very critical level we could start to pull back from. And once we start to pull back, I'm looking for a gap fill just below 431 and a strong support zone at 430. So if we slice through 430, that will be extremely bearish. It means we could be going back down towards 420 and another gap to fill at 423. If we break out above 440 and start to see impulsive buying, then we'll likely go straight up to fill that gap just above 447. On the NASDAQ 100 triple Qs, we were down 0.31% today, and the triple Qs are sitting right here at this critical resistance at 378, which is where we were expecting to go above 370. So above 370, we hit the next target, and we need to break through 378 to continue to climb higher towards 383 and then just below 387. A pullback from here could easily take us back down towards this gap fill at 363, or at least a retest that support at 370. If we continue lower below the gap fill at 363, then we can go fill the gap at 357 and retest that support at 355. On the Dow Jones, we were up 0.16% today, and intraday we did fill that gap above 344, so we can now delete that gap, and we're now starting to break out of the downtrending resistance trend line for 2 days in a row because we have the second day in a row closing above that level. So in the Dow Jones, it's possible we continue to push a bit higher towards 350 or possibly 345, but even if we did go all the way to 350, at some point we're going to need a higher low pullback before we can continue climbing higher towards the previous all-time high. So critical resistance in the Dow will be 345 and then 350, and to the downside we're looking for support at 341, the gap fill right around 338, and then below that we have support at 336 and a gap to fill at 333. On the Russell 2000 IWM ETF, we were up 0.04% today, and the Russell has been very weak, and it's still in a very powerful downtrend, which is telling us that the market breadth is very narrow and very narrowly focused in the big caps, which is mostly the NASDAQ 100. Now, if the small caps can hold this support zone between 165 and 167 and bounce up to close the gap at 180, that could give us our higher low, higher high breakout and tell us that we're breaking out of this downtrend. If we just continue lower and we can't break out of this resistance at 174, then we're looking for a gap fill at 165 and possibly even that next leg lower in the 150s. On the ARKK ETF, we were up 0.45% today, and we did not fill the gap down here at 38, so it's possible we're going to get a lower high rejection between 40.5 and 41, and then go lower to fill the gap at 38 and possibly retest the rising 20 daily moving average before we go any higher. If we can't hold that support, look for the next gap fills below at 35 and below 32. On the VIX, we were up 4.16% today, so the VIX is starting to rise even though we had a relatively flat day in the market, which is no surprise because we do have CPI data tomorrow. Now, even if we're getting a pullback within a bull trend, it's very possible the VIX at least bounces up towards 18. But if we are going into a bear market, we should see a lot of fear, which means we're going to see the VIX out above 20. So it still favors the possibility this is a bull trend, but during the pullback, we need to watch the VIX very closely. On Bitcoin, we're currently down about 1.5% as Bitcoin is starting to pull back from this resistance at 37,000. And keep in mind, we do have the full bull trend as long as we're above 32,000. Above 37,000, if we continue higher, we go straight to 40,000. And if you're looking to buy the dip, those levels would be 35,000 and just above 32,000. On Tesla stock, we were up 4.22% today, and 2 days ago, Tesla did fill the gap at 206, which is exactly what we were expecting if we broke down through the range below 214, so that fully satisfied the downside target. And now that we're starting to bounce, if we can clear above this resistance zone between 223 and 224, then we should come up here to 230. And if we break 230, we break out of the top of the range and we go fill a gap at 242. So above 230, you can get more bullish for a gap fill at 242. And if at any point we get rejected, this could be a double top that could take us back down towards 197 on a breakdown below 208. On Apple stock, we were down 0.86% today as Apple is still finding resistance right around 185. And if we continue higher and break this resistance, we could go higher towards 190 and the gap fill just below 191. At some point, I think we need to retest this breakout at 180, so we will need a higher low pullback at some point, but it's very difficult to know when that pullback's going to start until we start breaking down below some support. And the downside support is 182, 180 to 179, and if we can't hold all of that support, it's possible we come back down towards 174. So jumping back over to the S&P 500, this is a very critical resistance zone, and we've gone straight up with no sizable pullback, so we have no higher low within this structure. And with CPI data being a catalyst, that could be what starts us off selling and could be what starts our pullback. It doesn't guarantee anything, but that's what I would be paying attention to, managing a risk around these critical resistance levels. We are absolutely crushing this market on Bank Trade Alerts and the Stock Channel Discord server, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.